Hi, please go through this risk disclaimer. So welcome back to this new video. In this video, I'm going to teach you an advanced price action concept that we use in demand supply trading called ERC zones. They are also known as FTR zones. So what does ERC stand for? ERC stands for Engulf, Reverse, and then Continue. ERC. So essentially ERC zones also look like demand or supply zones, but they are special in nature. And so today I'm going to show you how ERC zones get created. So let's get straight into it. Okay, so let us assume that this line is a strong barrier. Okay. For now, just keep in mind that this is a strong barrier. What form of strong barrier? I'd cover. Okay. But for now, just to understand what are ERC zones, let us consider this is a strong barrier. So now what happened is that so price starts, let's say price is moving up. Let me choose black color. Okay, like this. Okay, and then it engulfs this barrier like this. Okay, so if I just let's say, yeah, so it engulfs this barrier, it means it breaks this barrier. Then price would reverse. Okay, so it can reverse from like this from here, and then it will continue. Okay, so the zone that gets printed over here is a demand zone, but also known as an ERC zone. So basically it engulfed an important barrier, a strong important barrier, then it reversed for a while, and then it continued in the direction of the engulf, right? So this demand zone would be called an ERC demand zone. So I'm going really slow on this one, intentionally, hoping that if I go slow, you would be able to absorb what I'm trying to explain over here. Still, if it's really fast for you, then I would suggest you go back and rewind this video and watch it a couple of more times. So price engulfed an important barrier, this brown line, let's say. It reversed for a while and then continued back in the direction of the engulf and created this demand zone, which would also be called the ERC zone, also known as FTR zones by certain traders. Okay, so two clarifications here. First is that I'm sure there would be a question regarding the location of this zone, this ERC zone. So in this first case, what happened is that price engulfed this barrier. So what I'll do is I'll extend this barrier, let's say, just to show what I mean over here. right? You can see that price engulfed this barrier, then came back slightly beneath this barrier, and then continued in the same direction of the original engulf, that is, in this case, in the up direction, right? So this is the first case. Second case could be, I'm sure you have taken note of this, right? I'm just going to rewind a bit. Second case could be that price reverses just a bit. Okay, it does not come back to the barriers, to the barrier or below the barrier, and then continues. So this is really a strong kind of a move. Okay, the buying pressure is so much that it is reversed a little bit and then continued in the same direction. So this is also a valid ERC zone. This is the second kind. So this demand zone created again over here would be an ERC demand zone. So note that this reversal did not come back below this barrier. Okay. So this is also a valid ERC. So this is the second type. Now there is one more important factor that you must consider, is that this ERC zone formation is complete only when price, after reversing and continuing back in the original direction, it is able to again engulf or cross this particular high. Wait, let me mark it with blue. This particular high which was created when price reversed. So only, where did it go? Okay, this is, yep. So only once price continued in the same direction, the third step. First step is engulf, the first important barrier. Second step is reverse, right? And then third step is continue in the same direction. And this continue in the same direction should also cross or engulf this high that was created just before the reverse step happened. So when price went up here, reversed a bit, a high was created over here. If you see this high, particular high, right? So this particular high needs to be also engulfed, or it needs to be crossed in the same direction to establish or complete this ERC zone. Okay, so hopefully you have taken into consideration all three steps: the engulf, the reverse, and the continuation, which should also engulf the high created thereof, right? Once this step is complete and price is able to cross this one and stay above this one, I would suggest price should close above this one at least, and so this gets established as the ERC zone once this closes above this particular high. So now the next question that you would have in mind is that what is this important barrier that we are considering? So this important barrier could actually be multiple things on the price chart. With experience, you would come up with important factors yourself. I would point out some important factors regarding this important barrier. One, it would be a strong resistance, right? This could be a strong resistance. Right? Second, it could be a major high, previous high. This could be a major previous high. Okay, so let's say okay, let's say yep, so something like this. This was a previous uptrend happening and price was going up, and let's say this was a major high over here. And then price started moving down, and let's say something like this happened. Okay. So let's say this was a major high over here. So this was a major high, which was engulfed. And then this ERC zone was created. So this major barrier could be a previous good high of a previous lifetime high, or it could be a previous trend high. Okay, this could also be a major resistance. So let's say that there were multiple times there were resistance in the past for this particular zone. Let's say this is a candlestick and this is a major, the candlestick wick is over here. The first wick is over here, second wick is over here. And let's say in the past as well, in the past price action towards the left, there was also a high over here. Okay. Let's say this is really on the left side in the past history. So this was a major resistance area or resistance line or something like that. Okay, this was part of that. So this again becomes a major important barrier. Okay, a very strong resistance. This is the example of that previous high. Third would be that a major important zone was present over here as a barrier, and that zone was engulfed, right? So, okay. So third type. A strong opposing zone. So in this example, opposing zone would be the supply zone because direction is up, right? So here some very strong, let's say opposing supply zone was there, right? And that supply zone was basically taken out or engulfed or destroyed and created a new ERC zone. And this type is very common actually. And it works well if the original zone was really good. So to give you an example of, let me just clean up the sheet. Let me give you an example of that. So by the way, before I clean up the sheet, if you have been following this particular method for some time, right? This particular high was also supply zone, isn't it? So when price was making a higher high over here, reached this peak and then started dropping from here. So it definitely created a supply zone over here, right? Okay. So here when price engulfed this particular high, it also engulfed this this supply zone, right? So this is the example that I was trying to explain, but in a different fashion. So this was a reversal zone. It need not be. Sometimes price might be dropping from here. So now is the time to clean up the sheet to present this example. This is an important topic, therefore I'm not coming up with live examples right now. For live examples, I would be creating the next video for that, because I need to explain with many examples, and if I keep on presenting examples in this particular video, then the video length would really go long. So trying to avoid that, to keep the video length as well under check. It's a big topic actually. It's an advanced topic with a lot of nuances. This is the basics, the basic important structure that I'm teaching you right now. And there are different nuances to it, which I will also share in upcoming videos. That would be more on ERC zones. Because just to give you a prelude of what is to come about this, we can have important barriers as important opposing zones like QM zones, like opposing ERC zones, then opposing major lifetime highs. I already mentioned that. Okay, and very good CPASs, compression zones, that is. Even engulf of strong compression zones also creates great ERC zones. So those are type of barriers, and they're a bit, different in flavors. So therefore, different examples would be required, and a new video would be required. Okay, so now I was trying to explain to you. So let's say that, let me just fasten it up a bit and use this pencil instead of that line. So I apologize if the drawing is a bit clumsy, but I think it would be the fastest way to draw instead of that linear lines one by one. So let's say prices is in a downtrend and it's coming down nicely, okay, like this. And it creates some important zones, okay. And what happens is that it creates a really important, let's say a zone over here. So just assuming that it created a very important zone over here. Okay, let's say this is a very important supply zone. And now price is nicely moving up in an uptrend. And now it engulfs this, reverses, continues. So this zone would become an important ERC zone, ERC demand zone, right? And okay, so because it engulfed is important, strong supply zone, okay. So this could be a QM zone or an opposing ERC zone, let's say. So, okay, now going by this example, let's say it created this important ERC zone. Okay, let me just then so let's say this is what has happened, and it created an important ERC zone over here. Now what happens is that price starts coming down, comes back to this ERC zone, right? Gives a nice reaction, let's say, and then it engulfs this ERC zone. And again comes back here, again drops like this. So what has happened here is that so this is a chain of ERC zones being created in this kind of price action. Okay, so what happens is that initially there was an important supply zone. It was engulfed, reverse, again continued to form this ERC demand zone. Okay. So now what happens is that price came back here, gave a nice reaction from this ERC demand zone, Then price again reversed and this time broke this one. So broke means engulfed. So this was also an important barrier, which was engulfed. Price again reversed and then again continued, therefore forming a new ERC supply zone on the opposite side. This also becomes a new ERC supply zone on the opposite side. So for this particular supply zone, the barrier was this important previous ERC demand zone. And for this ERC demand zone, the barrier was the previous important supply zone. Okay. And so this is another type of chain of ERC zone formations. So the expectation would be that when price again comes back to the supply zone, right, it reacts from this on the downside. So you would look for a opportunity here on the short side. Okay. So this is the basic concept of ERC zones. Okay, you can go back, rewind. ERC is engulf, reverse, continue. You engulf an important barrier, then you reverse a bit and then continue in that direction. And the zone created over here is the ERC zone. And for the ERC zone to complete or become valid, it needs to engulf this high that was created after engulfing the barrier. And barriers could be multiple things. In different cases, the barriers could vary. One type of barrier is this one, that is an opposing important zone right now before the screen. Second type could be, I shared that it could be a lifetime high or a lifetime low. It could be a previous major swing high or a swing low from where a downtrend or an uptrend had started. Okay, then it could be a major support or resistance where there were multiple instances of that area, price area or price level acting as a major support or resistance. Okay, and in examples, I'd also show you how even compression areas being engulfed can create these ERC zones, and plus some more other important stuff, right? And those are for the next videos. In the next video, stay tuned. I'm going to share you lots of examples. This is an important topic in our price action method. So stay tuned and expect the next video very soon, this week or by the next week. By that time, you must master this conceptual video on ERCs, right? So, and if you haven't been following if you haven't been learning the basic videos, then go ahead and watch the basic building block series. And if you prefer Hindi, then I have started a Hindi channel which will have all similar videos, or I would say all the same videos for the Hindi audience, Hindi learners. So teachings in Hindi in that particular channel. So go ahead and subscribe. And it's not that both channels would have the same content. It's possible that in a flow I'm making a video in Hindi, and I might even talk about something new there. So it's better that even people who understand Hindi and English and are subscribed to this English channel, you should go ahead and subscribe to the Hindi channel as well to get updates on that. So do check out the Hindi videos as well if you understand Hindi, because in certain videos I might even put some new concept while teaching, right? So it's not that both the contents will have same content or same information. It might vary depending upon what's going on at that point in time in my mind. So thank you so much. Please subscribe to both the channels and please share with your friends. Thank you so much. Bye-bye.